Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Today in the video we just need to update intraday charts view just because patterns and overall background we have discussed yesterday. So yesterday we also have got lots of data in the market. Jerome Powell talked about the current situation, Janet Yellen talked about the current situation. As a result, you can see collapse on the stock market. That stands with our trend and our opinion of the current situation progress, and this is not a surprise to us, especially if you'll take a look at the interest rates. You could see that interest rates has dropped recently. That is absolutely normal trend that we discussed in the weekly report. On the gold market, we do not see really big collapse. As you can see, investors are not hurry up to selling the gold, and just understandable, just because you could sell gold either you searching for a higher return on your investment, or you would like to move in some safety when you could say something when you're selling something. But hardly treasuries currently is more safer than gold. Second, the return on the treasuries currently is also arguable. It's just because they stand in a negative territory with inflation around 10% and return on treasuries on the 10-year is around 2.9. It's a lot of questions appears to whether it makes sense to invest there. And from that standpoint, currently gold seems better than the treasuries. So that's why you can see we don't have the same effect as the stock market. For instance, we'll take a look at the S&P yesterday. You can see this big collapse has happened. So on the 4-hour time frame chart, we have got the two patterns that we discussed. Actually, we talked about the single grabber, but you can see the result. We've got even 1, 2, 3 grabbers in a row. And that might be used as a background for a possible scalp long trade. So here is very difficult in general to call this performance as a hand and shoulders. It's a bit, well, choppy, but we're mostly focused on the 618 support, not on the shape of the controls itself. So we're mostly interested with the support area and appearing of the grabbers here. So it is preferable for a gold market to start upward action right from here, because it just will be better and more reliable step. When the market was able to stay above the 618 support and starts upward action right from here, and you could use the grabbers as a background for trading, placing stops somewhere below these lows. There is alternative situation exists. If even market erase the grabbers, it doesn't mean that it can't move up later, some lower levels. But as deeper market starts dropping here, as less reliable bullish context will be, and weaker chance, lower chances that market will be able to rebound from lower standing level. Yes, as I call it as a number 2, so potentially it might be some kind of the ABCD pattern here, reaching some support, maybe minor fib level, and forming garters triple to buy, then making an attempt to bounce, but this will be much weaker setup compared to what we have currently. So on the hourly chart, we do not see any patterns that have been formed. So, but market holds pretty nice with this 1805 support area, and take a look. This is recent upward action is very slow. So definitely some slowdown, choppy action, which suggests that, well, at least in these actions, really weak bearish pressure exists. So that makes me think that maybe indeed we could start upward action with relying on the grabbers that we have on the 4-hour time frame chart. So that's what we have currently on the gold market. Still, choice is up to you whether you would like to take part here with this trade or not. It's very similar to what we have actually on euro currency today on the Great British pound, and that is preferable scenario. It will be much better if gold starts upward action right from here, rather than it will show some ABC reaction down. And in this case, I'm not sure that I will take part in this trade. This is that I called as number 2 here. So that's much better, preferable scenario that we have currently. Besides, it's relatively clear, so you understand where is your risk. So just moving stop above the grabbers, below the grabbers, and this will be enough. It's very small risk here, but potential looks not bad. So let's see how it will turn.